So down payment assistance programs, also known as DPAs, can be borrowed or a grant. They're city programs, state programs, and even proprietary lender programs. So in today's video, I'm going to talk about down payment assistance and how they work. Again, there are many programs, so the guidelines and criteria for one program is not going to be the same for the next. And the only way you're going to find out is to get with a loan officer that knows about different programs. And guys, don't be afraid that if you see a program, ask your loan officer if they know about it. So let's get into it. Down payment assistance programs in California are designed to help first-time homebuyers and other eligible borrowers to overcome the challenge of saving for a down payment. These programs offer financial assistance in form of a grant or a loan to help qualified buyers with the down payment and closing costs associated with the purchase of their home. Before we get started, I wanted to do a little bit of housekeeping. If you haven't already, please subscribe to my channel. This helps other users to find my channels that are interested in obtaining a mortgage for their home purchases. Please like my video and be sure to place in the comments or message me the type of down payment assistance program that you would like me to make a video on. So here's how down payment assistance works in California. Number 1, eligibility requirements. To qualify for down payment assistance in California, you must meet certain eligibility requirements, and this may include income limits, meaning depending on the program, you cannot make over a certain dollar amount. Credit score minimums, normally 640 or higher. There are proprietary programs that do allow for your FICO score to be less than 640, and it would want you to have a first-time homebuyer status, and eligibility requirements vary from program to program. And there are programs that are specific for first responders and individuals that are employed in California K-12 public school district. Number 2, the application process. In order for your loan officer to see which program you actually qualify for, you'll need to complete the application and provide the documents for the pre-approval. If you want to know what that documentation is, please check out my past video. Hopefully there's a link somewhere here to the video so you can get exactly what the documentation is required in order to get started or pre-approved for a mortgage. Once you've determined that you meet the eligibility requirements for the DPA program, it's now time for you to find a house. You're going to want to find a house that's going to meet the specific criteria for the down payment assistance. So if you're getting something that is a city grant, then you're going to need to make sure that you're purchasing within that specific city. If you're getting something with a county, same thing, a home within the county that meets the guidelines that they're willing to lend on. Most programs will not approve you the assistance until you're already in contract. So number 3, program selection. There are various down payment assistance programs, as I mentioned, available in California. They're offered by the state, local governments, and even nonprofit organizations. Most loan officers don't know about all of the programs that are available. If you're working with a broker, just mention the program that you're interested in, and they will do the legwork to research it for you. Just because the loan officer or their company doesn't do the loans for the programs that you're inquiring about does not mean that the program doesn't exist or that you don't qualify. Hopefully, you are working with a loan officer such as myself that will see if the program would work for you, and if they can't do it, they'll still point you in the right direction to get the loan done. Number 4, funds disbursement. If you're approved for down payment assistance, you'll typically receive the funds in the form of a grant or a loan. If it's a loan, you'll need to repay it back over time with interest. The terms of the loan are going to be varied by the program. Some programs have forgivable grants that are forgivable over time. So it may take 3 years for the loan to be fully forgiven. So it doesn't start out as a grant, but it becomes a grant later. Number 5, your home purchase. With the assistance of a down payment program, you can now proceed to buy your home. You'll use the funds in order to cover up your down payment and possibly your closing cost. Keep in mind that closing costs can be higher with a DPA loan because the loan origination fee is paid by the borrower, while most loan origination fees are paid by the lender. When comparing your loan in the same program, the biggest deciding factor is the origination fee. While most lenders charge up to 1.5% to 2%, some lenders can charge up to 3% for the same loan in the same program. It's important to note that some down payment assistance programs in California have limited funding, and there may even be wait lists or deadlines. It's essential to research and apply for the programs as early as possible. Sometimes, as hard as this may sound, you can go through the entire pre-approval process and find out that the funds are no longer available once you are in escrow. I've done many down payment assistance programs, and while many people reach out because they are interested in down payment assistance, a majority of those applicants find that down payment assistance isn't really that beneficial for them. Down payment assistance isn't always the best option for every first-time homebuyer. In some instances, it's very limiting. The debt-to-income ratio is normally lower with the DPA program than for regular conventional loans or even with FHA loans. So that means that you will be able to qualify for less house than someone who brings in their own funds. And depending on the program that you are approved with, the interest rate is normally set by that program. And a lot of cases, it's higher than whatever the regular FHA or conventional loan rate is for that market. So if you have the funds, most likely it would be cheaper and more beneficial for you to just bring in the down payment at closing. Guys, just remember, all things have a give or take. If you bring in your own funds, you can save on the interest rate and monthly payment. Or you can have a higher payment and keep that cash in your pocket. Sometimes this makes more sense, especially in a market where the property values are increasing. You'll be able to get rid of PMI with an increasing value of your home faster than you'll ever save for it. I really hope you've enjoyed this video. As I mentioned earlier, please put in the comments a specific down payment assistance program that you may want to know more about and any other mortgage questions that keep you up at night. Remember, I do just service loans that are in the state of California, so please make sure those down payment assistance programs are specific to California. And if you made it to the end of this video, please like or subscribe to my channel. Please share the channel with your spouse, friend, or family that is interested in purchasing a home this year. Thanks for watching.